appreciate you all taking the time out of your day, morning, afternoon, depending on where you're at, to jump on this call. So typically what I like to do when I do small groups like this is really just talk a little bit more about our company. I'll talk a little bit more about myself and my background, and then we'll get into some questions. So it looks like you are all interested in real estate investing. And if you have a moment here, click on the chat on the bottom. Does everyone know where the chat button is? If you guys can find that, just type in the chat. Let me know that you're here, and let me know where you guys are from. And we'll get started. There'll be some back and forth interaction here. So don't be afraid to type in the chat, and then later in the call, we'll see if we can get some interaction. So we got Topeka, Kansas from Cindy. Welcome. All right, so let's go back and kind of start at the beginning here, what we do here at Rent to Retirement. So we are a turnkey real estate company, and turnkey can mean a lot of different things to a lot of different people. So I want to really define what we mean when we say turnkey. So before we ever have any properties that we have to sell to investors, or before we ever make any investments ourselves, the first thing that we'll always do before we make any investment is market analysis. We always want to make sure when we're buying rental properties that we're going to buy properties in markets where we can get the best returns and have adequate cash flow. We look at other important criteria. We'll look at things like landlord-friendly legislation and low taxes, right? Which are why I don't buy rental properties where I live. I live in San Diego, California, right? There are better markets to buy rental properties in, and we'll talk about that in a little bit. We'll also look at other criteria like future population and economic growth. We always want to make sure that any long-term investment we make is going to be somewhere where we're set up for sustainability. All right, so let's kind of break some of that down right now, right? So when we're looking for rental properties, especially turnkey rental properties, right, they do not have to be in the area in which we live. And like I said, I live in San Diego, California, where properties cost 7 figures and rents are high, but they're not high enough to justify buying a rental property for that, right? So there are better markets, typically in the South or the Midwest, where housing price points are much lower and rents are high enough to justify buying houses at those price points, right? So once we do identify markets that we like, what we'll do is we'll go in and we'll start to buy property and build out a portfolio. We'll work in that market and we'll establish a local team. And by a team, we're talking about real estate agents, realtors. We're talking about contractors. We're talking about property managers, those kinds of things that you would need to have a successful rental property. We'll work with that team hand in hand and start to put systems in place so that way we can offer a consistent rental product. So ultimately, a turnkey property for us is a property where the property has been fully renovated. We also do new builds, so we have properties that are newly built. These properties will have professional property management in place that will take care of everything from leasing the property out, all the maintenance calls, handling that work, so that we as an investor can invest with confidence out of state or out of market where the numbers make a little bit more sense for a lot of us without having to spend all of our time, energy, or take on the financial risk of doing all of that work ourselves. So that's really the value that we bring at Rent to Retirement, is we have really a one-stop shop where you can buy quality rental properties that cash flow without having to spend your own time or energy looking for those properties or trying to fit a square peg into a round hole, or a round peg into a square hole, however you say that. But we want to make sure that we're getting these properties in markets where it makes sense to have rental properties, both from a number perspective and from a legislative perspective. Okay. In addition to that, our company will work with our clients on really doing this in a very strategic way, right? Most people don't just stop buying one rental property. Most people need to build a portfolio to get to whatever those goals are. A lot of times the goals I'll hear from people are, I want financial freedom. I want to be in a position where I can retire. I need enough monthly income to cover my costs. So we want to do that in a strategic way. We don't just want to always buy random properties. We want to do it in a way that makes sense and use strategies that make sense to get us towards that goal as quickly as we can in a way that is viable. We don't want to take a lot of unnecessary risks to get there, right? So our goal really is we want to build a long-term partnership with you guys, as we do with all the investors we work with, where we help you guys be successful. That way we can continue to build that relationship, continue to build your portfolio, and get you guys to the finish line. All right. A couple of points about the types of properties that we typically are looking for or working with in rent to retirement. So as I mentioned, we'll have new build properties. We'll also have properties that we rehab. We're mainly focusing on B, like Bravo, B class areas. We find that's where you can get a good balance of cash flow, but you're still attracting a quality tenant. Our price points will typically be anywhere from about $80,000 to about $200,000 or so, for the most part, on single family. We also do have multifamily. We'll have commercial properties occasionally. We'll also do new builds, as I mentioned, and we'll also do development projects. So we work across multiple states. We'll always have our inventory listed on our website, which we'll drop a link in the chat here towards the end of the call. And ultimately, we do not charge for our services. We make our money selling houses, and we make our money on the sale of the house. We're not looking for investors to co-buy properties with us. We're not on the title or deed or anything like that. After you guys purchase the property, they are your properties. So a lot of folks that we work with will come in. They'll either have large portfolios already and they're just looking to add on, again, strategically, and do it in a way to get to their end goal without creating more work for themselves. A lot of our investors are also brand new investors, right? Looking to get started, people who are either not involved in real estate, or people who are doing flips and rehabs, people who are going out adding value to properties, and maybe they're in a market where the numbers just do not make sense to hold that property or to burr that property. It might make more sense to sell that property, take that money, and then they can buy multiple rental properties in another market. So that's where a company like what we do, Rent to Retirement, that's where we come in. And right now, one of the things that a lot of the folks that I talk to, both through Rent to Retirement or through other means, through other groups of real estate investors that I'm a part of, is lack of inventory. People are having trouble finding houses still, even with interest rates going up and housing price points slowing down a little bit in some markets. People are still having trouble finding inventory. We still have an inventory shortage in this country. Our company has been fortunate enough where we have built all these relationships. We have done a great job in these markets, finding people who are able to provide us with these properties. So we have a good flow of inventory, and any given week we'll have anywhere from 10 to 25 new houses to sell. So hopefully that gives you guys a little bit of a better idea about us. We can also put you in touch with all kinds of lenders. We can put you in touch with folks who can help you with LLCs and setting up corporate structures. Obviously, we have a lot of great partner companies like Vestor Pro, right, where we help their students really build out these strategies and get to a point where you can get to that end goal of financial freedom. So generally, a lot of our investors will come in and buy anywhere from 3 to 5 properties to start. It's not something that is required, but it does help expedite a portfolio. There are a lot of different strategies that we can really look at going through when it comes to buying rental properties. How do we scale is really the main issue for a lot of people, not just in real estate, but in businesses in general. People have a lot of trouble scaling. How do I go from 10 clients to 100, or how do I go from $1 million in revenue to $10 million in revenue, right? How do I scale the business in a way that makes sense without forcing myself to take a couple steps back and putting myself in an overly leveraged or overly risky situation? So there are all things that we help investors build and plan around. Real estate is a unique investment opportunity because we can use bank leverage in a safe way. The government essentially sponsors our ability to do this. We can't go into the stock market and buy 1,000 shares of Apple and only pay for 20% of it. We can buy a house and only have to pay 20% of it and have a solid institution essentially at a relatively low interest rate, even though interest rates have gone up. The interest rate is still pretty low historically. Allow that institution to finance 80% of our investment. So real estate is a unique opportunity to do that. And ultimately, a lot of the members in the government are going to keep it that way because they're all investing in real estate. All the wealthiest people in the world invest into real estate. Even those whose wealth did not come from real estate initially, they buy real estate now, right? They might be diversified in other things, but they certainly buy a lot of real estate. So real estate is the unique opportunity to really kind of exponentially grow a portfolio with someone else financing most of your investment. There are a couple of good opportunities in real estate outside of just the initial cash flow that you get. Most new investors will focus on the cash flow that they get in a property in year one. At a time, economically like we're in right now, where housing prices are a little bit higher, they've gone up pretty quickly, and we're still waiting for that to settle a little bit. And interest rates have also gone up. What that means for rental properties a lot of times is the cash flow looks a little bit lower than we may have seen before, but that's not a bad thing, right? Because cash flow does grow every year, right? Year one is, when we look at analyzing a property, we're looking at year one usually. Year one is just year one. Typically, rents will go up every year. I like to raise my rents usually about $25 a month every year. This gets the tenants that are living there used to rental increases. It also puts them in a situation where the $25 a year isn't going to break the bank, right? So I much prefer doing something like that than going in and raising the rent, every 3 years by $200 or $150 or something like that. That'll cause a tenant to move, and every time you turn over a property, that's money, right? You're going to have a vacancy. So we try to limit that. So I do like to do small rental increases every year. I do like 1-year leases, so we have that flexibility. Other benefits of real estate and investing in the long-term rental properties is you get to write off the depreciation on your taxes, which essentially can negate all the income that you're making. So you're not really paying any income tax on the rental income you're getting. Obviously, you'll want to work with an accountant or a CPA who is well-versed in real estate and can help you make sure you're getting all the tax advantages that you can look at getting in real estate. The other two big advantages are tenant paying down your mortgage, right? So the tenant is who's paying off your debt, not you. So we're using debt in a smart way here. We're using debt in a way where we're using that to create more income. So your tenant's paying down your debt, which helps build your equity position. Over time, the properties will appreciate, which also increases your equity position, which in a timeline, typically 4 to 6 years after you buy a property, you'll be in a position where you have a good bit of equity there. At that point, you can look at either selling that property and acquiring more higher producing properties, or you can look at doing a cash out refinance. And again, one of the benefits of real estate is if you do a cash out refinance, there's no income tax on that. So it's a good way where you can make a good chunk of money without paying taxes. Other than that, guys, why don't we open up to some questions? So it looks like we have people from all over the country here: Kansas, I see Alabama, New York, Central PA, a couple California. Why don't we open up to some questions?
Okay, I'll start. I'm Kim. I'm from Syracuse, New York. I was looking into doing rental properties for college students because we have Syracuse University up here, and we have a lot of distressed properties. I can pick them up $5,000-$10,000, renovate them, to where they're, safe and clean, for rentals.
Mm-hmm.
And 4-6 bedroom units, rent them out to 4 or 6 college students at a time. Do you know of anyone who's done this and whether that is a good option, or am I possibly walking into a disaster?
So Kim, welcome to the webinar, and you can certainly make a lot of money doing what you're looking to do. However, there are a couple things that you need to consider before you rent a property out to college students. And I don't know how your college years were, but I can tell you when I was in college, we partied quite a bit, and We didn't really care about the properties we lived in. So when you're looking to especially rehab a property that you're going to essentially burr and hold in an area where you're going to be renting to college students, one, you've got to really consider whether you're going to do a 1-year lease or what's a typical lease in that area. Is it only a 9-month lease because of the 9-month college year? Or do they do 1-year leases, and how do you kind of work on the in-between months when the students aren't there? Two, maintenance costs are going to be a little bit higher because college students, right? They are young adults. They're really just getting their freedom for the first time. They're going to do what college students do and make bad decisions sometimes. So certainly you want to use, when you're doing your rehab, more durable materials. You want to use things that are going to be cheaper to replace and not going to break as easy. You don't want to make the nicest marble countertops, things like that in these places.
Definitely. Well, also, since Syracuse University is a private college that's very high tuition, I was going to have the contract include the parents.
Sure, and that's something you can look at doing. There's a lot of money to be made there. You just got to be aware of some of the pratfalls. New York is, as a state, a very tenant-friendly state, so you got to consider that as well. It's not a state that I like to buy rental properties in. There's, again, certainly people that have rental properties there and they're making a lot of money, but you got to be aware of what the local laws are, that kind of thing, right? It's a lot harder to evict someone in New York than it is to evict someone, say, in Missouri or Texas.
Yeah, everything you just mentioned, I've been running through in my mind how to deal with it. But I just want to make sure that, that it was a good idea and that other people have done it. I just have to make sure that I have all my, all the possibilities of bad things happening. I have them addressed ahead of time. Sure. And of course, there's always going to be something that I didn't consider, or it's worse than I had expected. I realized that, but I just want to make sure it was definitely going to be a good idea.
Yeah, and a colleague of mine does flips and rehabs and burrs in the Syracuse area. His name's Ethan Coelho. So he's doing it out there. He's making it work. There's certainly, again, a lot of people making money in that area. It is, again, if you're going to be doing a rehab and then holding onto the property, you've got to, first and foremost, I like for investors, especially back in the days when I did more real estate coaching, than just looking more towards rental properties and passive income stuff. I like investors to have multiple exit strategies when they get into a rehab property. You got to figure out if this is going to be a burr, right? First and foremost, right, the numbers got to make sure that your numbers are going to work for that burr. But I also like people to have an exit strategy to tell if this is a burr, the initial plan, and it's not going to work out, or something goes a little bit sideways with the property or the rents in that area go down, am I still going to be able to sell this property and make money off of it, right? What are the other exit strategies? So that's something I'd always consider when going into a project, looking at the direction you're looking at. It's certainly good consistent income, especially at a school like Syracuse, like you said, with a higher tuition, typically higher academic standards. So you're going to be looking at getting folks in there who have more access to capital or their parents' capital. College students are typically going to be consistent because a lot of that's getting paid for by financial aid or parents. So there's a good opportunity there. In an area like New York, there's just some extra things you got to consider when you're holding rental properties.
Okay, then. Thank you.
All right. Absolutely. My pleasure. Let's see. So in the chat, we have a couple questions. Our info, our link there should be in the chat. So I know Yulia asked for that information, and Bryce just dropped that in there again. So you just click on that link. You can sign up for a call with one of our team members. Short-term rentals can be a good way to get started. So Andrea, short-term rentals are kind of like the modern gold rush, right? A lot of people are rushing to buy short-term rentals. Short-term rentals can be very profitable, but there are things to consider with short-term rentals before, versus long-term rentals, right? First and foremost, again, the first thing I always look at before I buy any rental property is what is the local legislation? What's going on in that state? And what are the laws? right now, with the ease of short-term rentals that companies like VRBO and Airbnb have kind of created, this whole do-it-yourself short-term rental, you're seeing a lot of local governments react to that, either by high licensing fees, high taxation, or outright banning Airbnbs. So you've got to certainly consider the local climate on short-term rentals before you buy a short-term rental in the market, right? And it'll have typically a lot more rules and regulations than a long-term rental, right? You've also got to consider the neighborhoods. Some neighborhoods where they are perfectly legal will have a bunch of long-term residents in that neighborhood that will not appreciate you buying a short-term rental in there, and they'll call the cops on the people in that place every single night that they have any music playing or something like that, and you're the one who gets really left with that to clean up. So that's just some things to consider with a short-term rental. Other things, most places have a high season and a low season. In the high season, you might be able to, make multiples of what your mortgage is on the place, but in the low season, you might not even make the mortgage. So you've got to look at those kind of things and balance out your high season with the, essentially you got to pay for the entire year with your good months. And then again, just getting back to an Airbnb, people on vacation are typically there to have fun, whether they're family people or whether they're younger people. Maintenance costs on an Airbnb are going to be higher than on a long-term rental almost across the board. People are going to break things. And that's just part of it, right? So you've got to factor all that in. So when you see a nice big number with an Airbnb, you've just got to consider that your costs are going to be a little bit higher as well. And you've really got to do research on that market. A beach property in Pensacola, Florida, or St. Pete in Florida, where they maybe don't have a lot of regulations on Airbnbs, could be a great opportunity to make a ton of money. An Airbnb in Green Bay, Wisconsin, you're probably going to rent that out a little bit in the summer for people who want to get up in that area, a little bit during football season, but then there's probably going to be a lull in between in the spring and fall. So you've got to consider those kinds of things when you're looking at doing an Airbnb or a short-term rental. Certainly, it's a good opportunity to make money. I like long-term rentals. I like consistency. I don't like headaches. I like my properties to just run smoothly. Obviously, in real estate, there's risk involved with any investment, but I just like to lower the risk on my end. I'd rather have a property that's just consistently producing for years without having to worry about the highs and lows of an Airbnb. So hopefully that answers that question. So the ultimate answer is there's not a right way or wrong way, Andrea. The answer is you got to do what makes best for you in your situation. And team members like our team, if you schedule a call with us, can certainly walk through your situation with you and start to figure out a plan and strategy that makes sense. And we will have partnerships with folks who do short-term rentals, and occasionally we'll sell short-term rentals ourselves. But generally, most of what we do is going to be long-term rentals because that's what works. It's worked for decades at this point. So we know what to expect. Bryce, how much more time do we have?
We have about 4 minutes. If anybody has a quick question they want to get off.
To the question in the chat, Yulia, we have banks, we have lenders, we have a wide variety of lenders who can get you any kind of financing needs you might have. One thing to really consider as you guys are working in real estate, and maybe if you're doing a BRRRR or you're buying a turnkey rental, you want to make sure you're working with a very investor-friendly lender. That's a key across the board. You can work with other lenders, but if you're working with a big bank, they are going to either give you problems as you get through the underwriting and closing, or afterwards, if you're trying to do a quick claim, move a property to an LLC, they're going to raise red flags. So you do want to work with investor-friendly lenders, and our team can certainly link you up with a ton of investor-friendly lenders, really for any kind of financing need you might have. And then Andrea, typically 20 to 25% down, depending on if it's single family or multiple units. Right now, sometimes you can buy down your interest rate a little bit by putting down 25 to 30%. You can get a much lower interest rate. And sometimes right now, in the current climate we are operating in, that's something that can potentially make a lot of sense.
All righty. Well, we are running up against time here. So again, if you'll please use that link in the chat that I sent in there. And if anybody doesn't have that, I can send it again. Reach out to InfoInvestorPro. They can kind of dig more into your specific situation and then kind of tailor it more towards you. I see that another question popped in if you wanted to answer that one.
Yeah, just down payment percentage again, 20 to 25%.
So thank you everybody for being here. Again, I really, really appreciate it. Lars, thank you. This was awesome, very valuable knowledge. Again, please use that link. Please reach out to Rent Retirement. Please just talk to them. They're awesome. They're a wonderful company. They're all very, very personable and easy to get along with and talk to. So again, Lars, thank you so much for doing this. We really, really appreciate it.
Absolutely, my pleasure being here. Nice to meet everybody, and we'll hopefully talk to you guys soon.
Thanks for watching the Rent to Retirement YouTube channel. Check out some of our other videos, like this one, or this one here.